all traders in the market have losing streaks. Some find it extremely hard to recover. In this video, I'm going to talk about how do you deal with your losing trade and how to recover from it. So as traders, we all go through phases of the markets where even if we fell off a boat, we can't hit water. That's just the fact of trading. There is no such thing as having a 100% win rate where you just go into the market, execute and expect winning trades on and on and on. The market's not like an ATM. And like any other business, there is cost that comes with it. So when it comes to recovering from huge losses from your trading, there is this concept called the A to C game analysis. This is a concept where a famous poker player coach has come up with to analyze losing plays. Okay, but in trading, we can apply it the exact same way. So let me break it down. There's three main types of mistakes: the A game mistake, B game mistake, and the C game mistake. When we're talking about A game mistake, that generally means you're doing everything correctly. You're following your analysis, you're following your trade management, you're following the right position sizing, and yet the trade still loses money. If that's happening to you, those are actually not losing trades where you should worry about too much, because that's just the market. Sometimes we can do everything right and the market can still go against us, despite having the best strategy in the world. So that's a fact that we have to internalize and really understand that there's no perfect strategy. We just need to stick with our strategy, stick with our approach, and take on those losing trades, just like how businesses would have overhead costs. It's inevitable. Now, I want to jump right onto the C game mistake, the other end of the spectrum. When we're speaking about C game mistake, that basically means you're not following your rules, you're not following your strategy, you're not following your approach, you're not following the right position sizing, and you got in on a trade. If you happen to make all these mistakes and still get in on the trade, that's all on you. That means something is wrong with you. Why are you not following your strategy? Why are you not following your approach? In our case, at Urban Forex, we always look for a strong trending market for a trend pullback trade. Now, if the market is not trending, and yet we find whatever reason we can to look for a trade, perhaps we heard that there is news anticipating that a long-term trend could be coming in. Perhaps you heard someone on the trading community is getting in on the trade and you feel FOMO that you're not in the trade and that's why you're getting in despite the fact that there is nothing really setting up. If that's the reason you got in on the trade, then there is a psychological problem here. You're dealing with FOMO, okay? So we can go on and on and on here about all the different type of psychological problem. It could be position sizing problem, right? You could be in a place where, you're trying to make ends meet. That's why you're going in with a trade position size of maybe 10% of your account, 20%, 30%. And then a few trades just wipe out your whole account. That could be another reason. The other reason could be you have been sitting there from 9 to 12 p.m. waiting for a trade to set up, nothing's setting up, and then you just feel antsy and you want to get in on a trade, right? If that's one of the reasons of why you're getting in on a trade, that's a C game mistake. It's a psychological part of your trading where you really want to understand the problem is not on the markets, the problem is not in your education, the problem is where you're not trading professionally. But don't worry, if that's the type of mistake you're always making, I'm going to show you how to avoid that going forward. Now, let's go to the B game mistake. Now, B game mistake is a mixture of A game mistake and C game mistake. This is a situation where you're getting in on a trade, you felt that most things are lining up in terms of your strategy, you have all the checklists down in terms of where you want to get in, which time frame you want to get in, do you have your entry signal, do you have a good stop loss placement, a good take profit placement. You feel that everything is lining up. You get in on the trade, but there is just one little thing where it feels like you're not certain, right? And then the trade turns into a losing trade. Now, if you have trades like that, this is what you would categorize as a B game mistake, because you're unsure if it's a problem from your trading approach or if it's just the market not doing what you want. So the B game mistake essentially is an area where you're just unsure if you're doing the right thing or the market is just fucking you over. So this is the part where you're really analyzing your losing trade. Once you have classified your A game mistake, your B game mistake, your C game mistake, the first most important part is to understand, okay, out of 10 trades I have here, where am I losing my money? Like I was saying earlier, the best scenario would be for all your losing trades to be in the C game mistake. Why? Because the right education is going to solve it all. So let me give you an example. If you're out on a treasure hunt in the deep end of the forest and there is multiple different teams looking for the same treasure, if you see everyone going in one direction, you would probably wonder, hold on, could the treasure be in that direction? Because everyone's going there for whatever reason, they're all going there, and you might just follow along. But what if I give you a complete roadmap telling you, hey John, don't look at those people, I'm gonna give you a complete roadmap here, and this is exactly where the treasure is. What are you gonna do? Are you still gonna feel FOMO to follow those people? Or are you just gonna stick to the roadmap and look for the treasure yourself? Hopefully the answer is the latter. So what I'm trying to tell you here is, with the right strategy, with the right education, if you know exactly what you're looking for in the market, it's going to be so much more easier to avoid psychological problems like FOMO, revenge trading, holding on to losers, holding on to winners that eventually turns into losers. You would avoid all those mistakes because you know exactly what you need to do and what you have to do in the markets to make consistent profit. Now, don't get me wrong. Even an experienced trader, despite having a solid strategy, they will still time to time have the C-type mistakes because that's just us, we're humans, right? We could have a bad day at home, we fight with our spouses, our kids are not behaving well, they have bad grades or for whatever reason, it might affect us mentally and we might bring it to the market. So I'm not telling you that education is gonna solve all your problem, but it's gonna solve 90% of your trading psychological problem. So that's how you would want to deal with your C-type mistakes. Having a strong strategy, knowing what you need to do in the market. Now, to solve the B-type mistake, the B game mistake as they call it, this is the part where you really want to speak to your mentor. Okay, whoever's giving you the education, you want to double check with them. Is what I'm doing here correct? Is what I'm doing here wrong? Because I'm not sure. It seems like I'm following the plan, but sometimes I'm just not quite sure because perhaps, let's say if you're an urban forex student, because you're seeing correlation lining up, but there's just two pairs that's just not lining up. And when you did take the trade, it actually turned on you. Is it because the two pairs were not lining up in correlation? Could that be a reason? So that's just one example, right? So when you have a B game mistake, the easiest way is to check with your mentor, okay? The second way to deal with it is just to track those data. So what that means is, if you see a certain criteria in the markets where you're unsure of, just grab a screenshot of the markets and then just track them. Just track and see what happens afterwards. Put on a coat, put on your detective hat, and then just collect as much data as you can, just so you understand the type of variable you're working with here would generally lead to winners or losers. That's what you want to think of when it comes to B-type mistakes. So generally, when traders have B-type mistakes, it's a lot more complicated because you have to dig through your strategy, your approaches, your position sizing, your trade management. You would need to analyze everything that you're doing and see which part of your trading approach, which part of your strategy is leaking. Now, when it comes to A-game mistake, this is going to be hard to hear, but it's really just about accepting the loss. So it's the same thing as I was saying earlier, having a business cost. Okay, we have professional traders like Naveen at Urban Forex. He has a lot of A-type mistakes as well. Those A-type losses that he's taking would be slightly different because what he's doing is he's trying to time the market as things are turning. And when it comes to trying to time the market, you will have losers here and there, here and there, here and there. And when you actually time the market correctly, that one right move is gonna make back 10x of what you have just lost. right? So those types of losing trades, they're not trades that you need to be worrying about, because you know in the grand scheme of things, if you continue doing what you're doing, you're gonna make back those winning trades. The catch here is, when you have too many A-type mistakes, you go into doubt and you go into revenge trading, and your confidence starts to go down. You have low conviction on your trade. That's where things can get messy. So you see, we are all traders. It doesn't mean that if you're a trader who has been trading for 7 years, you're only gonna make A-type mistakes. That's not the case, because sometimes traders can go from one spectrum and then go into the other spectrum, based on the variables in their life and in their trading. So these are the type of mistakes you really want to be aware of. So what do you want to do during this period? The ideal thing to do here is really just take a step back from trading, because chances are, if you're watching this video, you have taken a couple of losses in the market and it's just getting a little bit too hard to deal with. So at this stage, it's absolutely fine to take a step back from the market. Take a short break, take a week break from the market, because trading can be very, very demanding, both on the body as well as the brain. Take a step back, take 1 week off from actually live trading and really look into your losing trades. Right? Do post analysis on all your trades. Try to look at your losing trades and answer questions like, why did I get in? What was the entry criteria? What was the higher time frame doing? What was the lower time frame doing? Do I have correlation? Do I have volume? Was there proper trade management? Was my risk position size correct? Am I trading at the right time of day? Is there volume? So on and so forth. It all depends on what type of approach you are trading. So really look at each trade and really understand, why did you take the trade in the first place? How did the market react to it? And what can you learn from it? Because every single trade is a learning opportunity. If you're not learning from your losing trades, you're just throwing money into the ocean. So I want to end with this. Your next trade is going to be the most important trade of your life. Treat it as though you have the entire government backing you up on that one single trade. That's your next trade. If you're not treating your next trade like that, then you're just fooling around. And you don't want to fool around in the markets, because you know what the market is going to do to your bank account. So with that said, I hope I gave you a better roadmap on how you want to handle your losing trades and how you want to come back from it. I hope you enjoyed this video. If you haven't already, make sure to like the video, subscribe, and turn on the notification bell. I'll see you on the next one. Cheers. Bye for now.